Hey, how you doing? This is Adam Post, publisher of more than 1,000 comic books. I've been promising for a long time I'm going to do a video talking about transfer prices for Disney. It's the thing that, as someone who has produced content as I have, and I understand some of these accounting principles, Bob Chapek restructured the business with Disney Media and Entertainment Distribution so that basically Disney was creating all of its own content and it was then selling to itself. I know what that can do to mess up accounting and make things look like fuzzy accounting math. Not a lot of people necessarily familiar with it. I'm pretty familiar with it. And what I can tell you is, even though Bob Chapek may not have been, cooking the books, the structure that Bob Chapek created allowed for excessive use of what we would call this transfer prices, depreciation and amortization, basically being able to massage your numbers on costs, profits, losses in the most favorable possible way, especially with the strength of Disney's brands, and I'll explain why. But being able to say, look, we think the Marvel brand is worth X, so we're going to sell our TV shows to our streaming service at this extra high price, it's almost hard to dispute unless the losses get out of control. It's actually an incredible advantage that Disney has. If they had managed it maybe a little bit more carefully, it's something that Bob Chapek, he would still be CEO. So let me get into this. Before I do, please be sure you are subscribed to the channel. Click the bell for notifications. Give me a thumbs up. Really appreciate you guys. The channel has always been growing thanks to you, and I really do appreciate you. I'm not saying that Disney is going out of business tomorrow. In fact, I was saying that with Bob Chapek in charge, I couldn't see a future for the company. But what's interesting is, as soon as they had that dilemma, that it looked like, wait a minute, things are really just going to fundamentally crash at Disney. They got rid of Bob Chapek. Here comes Bob Iger. Though I want to see what Bob Iger says and does over the next couple of months, but so far all I see him doing is talking about gun control and supporting their woke movie approach. But I don't hear him saying and doing anything particularly interesting or clever or anything even representing like a CEO of an entertainment company ought to be doing. A big test for him is, let's see if he goes and brags about the incredible success of Avatar: The Way of Water, which is an incredible success. It's part of a Fox deal that he helped to orchestrate, so he has a lot to brag about. But let's see, that's what a CEO would do. If he's not going to talk about the positivity of Avatar and spin that into some really strong narrative for why you should believe in Disney and believe in their properties, I have to wonder about what it is that he's actually supposed to be doing over there, if he really is even acting as a CEO. What is a transfer price? And why am I so worked up on transfer prices? Well, let's just put it basically this way. A transfer price exists so that the production companies of Disney can sell to this separate business, even though they're all owned by Disney. They can sell to the separate business of the streaming service all of the same Marvel Disney shows that they produce, all at a suspiciously high $25 million per episode cost. The transfer price is this. Let me give you a definition. What it is, how it's used, and examples. Okay, what is a transfer price? A transfer price, also known as a transfer cost, is the price at which related parties, meaning companies that have connections, close connections of related party, co-owners sometimes, transact with each other, such as during the trade of supplies or labor between departments. Transfer prices may be used in transactions between a company and its subsidiaries or between divisions of the same company in different countries. But here's the key takeaways. And this really is important for what's been going on with Disney. Transfer prices that differ from market value will be advantageous for one of the company's entities while lowering the profits of the other company. Multinational companies can manipulate transfer prices in order to shift profits to lower tax regions. Let me give you an example of that. Apple, a lot of their intellectual property is owned by one of their divisions in Ireland that has a very low income tax rate. That division in Ireland that owns the name or brands related to Apple, they charge a licensing fee back. So basically, they get taxed in the lower amount in that country, so they can pass this along for tax savings. There are convenient things companies can do. To remedy this, regulations enforce an arm's length transaction rule that requires pricing to be based on similar transactions done between unrelated parties. When you talk about unrelated parties, that would be like when Disney was selling their shows to Netflix. Netflix isn't owned by Disney. So when Disney has to come up with a good price that Netflix is willing to pay, then you have like normal market competition. Those Disney shows that were sold to Netflix in just 2014, which isn't even 10 years ago, were on average of $3 million per episode. Now they're $25 million. So how could Disney afford to pay $25 million for a single episode? Well, they do pay that, but they don't pay that. Now we have to talk about depreciation and amortization. It's relatively simple. This is the concept that if I make an episode of Daredevil Born Again for you, and I charge you $25 million, and I'll say, I don't know what the budget is of Daredevil Born Again. We haven't seen it published publicly. Every Disney Plus show seems to be at $25 million, but we don't know yet exactly what it's going to be. But just for the sake of argument, Daredevil Born Again, that's going to have 18 episodes, which is also kind of odd of like, why are you doing 18 episodes? Like, that's kind of a lot. It's like twice the 9 that they've ever done for their expanded shows. We'll find out. But at $25 million an episode, one of the divisions pays $25 million for the episode. It doesn't mean they have to take an expense for $25 million. What do I mean by that? Well, there's an assumption, like any property that you buy. So if you buy a house, or if you buy a building, or if you buy equipment, anything that you would buy, you don't have 1 year of usefulness of it. In the case of television episodes, Disney used to have a very hard and fast rule of how they valued these things. That was going back to, say, 2015, 2016 in their SEC filings. They've since changed and they don't report. They kind of keep it up to themselves. What they announce is we make adjustments up and down based on our own judgment and whatever. That is actually quite sketchy that they don't have standards that they've published. Now, given streaming is a unique situation. And one of the great things about streaming is it is fair to say that, okay, you're going to tell me that your TV episodes have more of a value to them because now you can distribute them over time. You don't have to rely on making a deal with a cable channel or another streaming service. You've got your own streaming service. It's fair to say that the life is extended of these series. Just so you get an idea, Netflix generally takes 5 years to write off like 90% of the value of their episodes. Disney was taking 10 years in the past, and now they're not publishing anymore. So a $25 million episode of She-Hulk, any Disney Plus show, probably they're taking about 10 years to expense that. Year one, if I buy one She-Hulk episode from you and I say I'll pay you $25 million for it, I can say that, well, I didn't really pay $25 million. I paid $25 million over 10 years of value, roughly speaking. So when I'm showing my profits and my losses for my streaming service that paid $25 million or, committed to this $25 million price, I only have to show profits and losses for whatever I'm expensing for that 1 year, $2.5 million. The following year, I also have to show an expense of $2.5 million. But what happens is, if the streaming service continues to grow and grow and grow and grow, it gets kind of hidden the way that you're expensing stuff from an older library from the second year. I know it's a little funny and it gets complicated, but that's the thing that makes me look at it and say, well, if you lost $4 billion with your streaming service, how much did you really expense everything that you spent on your, whatever it is, $8 to $10 billion on your Disney Plus content? How much was expensed? Was it 10%? Was it 20%? She-Hulk is not worth 10 years of $2.5 million a year. A lot of the Disney Plus shows aren't worth that, particularly at these exorbitant rates that they're charging themselves. But why are they charging themselves $25 million when they can just charge themselves, maybe something less, maybe $10 million? Well, the answer to that is the standard markup that they're allowed to charge. Even though Netflix might not pay $25 million an episode, keep in mind Netflix pays $15 million for Sandman. They complain about that. Anything that's a Marvel show so far has been $25 million an episode. Mandalorian was $15 million an episode. But Netflix watches their pennies a little more carefully. The only thing close that Netflix really seems to have is Stranger Things is $30 million an episode. Okay, that's more than $25 million, but most of their shows, Sandman was considered expensive, are much less expensive. The Boys for Amazon is much, much less expensive. They get this $25 million. Now, 30% is considered a standard markup. And Disney points out they get a 30% markup from their cost of production when they sell shows from their production unit to their distribution unit. So Disney is saying, well, look, it costs us $17.5 million in our production business to sell our show for $25 million. So this year, we made a profit of $7.5 million per episode that we sold Marvel Productions to Disney Plus, the streaming business. So if I sold one episode, even though I'm only taking the expense of the episode at, say, $2.5 million a year, and then we're stretching the 90% of it over another 9 years, and that's estimated because they don't publish this information, but I'm telling you they're doing this. They're able to claim a profit of $7.5 million because they sold the show to the distribution unit. So if they had sold this to Netflix, let's say they sold just 10 episodes of all shows combined, it's more than 10, but just for easy numbers, they could say, well, look, we sold for $250 million, we sold 10 episodes to Netflix, we sold 10 episodes to Paramount Plus, whatever, of Marvel content. It cost us $175 million to make, so we made a profit of $75 million. And they would declare that profit that year. Netflix, Paramount Plus, whoever the customer was, would be able to expense it at $2.5 million a year because they paid $25 million, and it doesn't become worthless after 1 year. So if you can get a sense of what's going on, they can sell at a very high price any single episode of a Marvel Plus show to their own streaming service and declare that they made a profit of $7.5 million, even though they're only taking an expense of $2.5 million. This number could be slightly higher, but again, they don't really publish it. All of their most recent stuff shows like 10 years worth of this kind of amortization. Big issue here is this cost of $17.5 million. That's an estimate. I know that they have a standard markup of 30% with Netflix, and Disney says, well, we charge a standard markup when we sell shows to ourselves. It's in their recent filings. They claim a cost of $17.5 million. But part of this $17.5 million is also, massive overhead that they have. All the employees, all the buildings, in addition to the individual production. This $17.5 million is not just direct labor to people that are physically making the shows, like actors, writers, producer. This is, in addition to those direct costs, their overhead. Kevin Feige's cost attribution, his employees, his building. So when Disney goes and they say, oh, well, we sold this for $25 million to ourselves, they are reporting a profit that I think is a bit excessive. And they're also showing a cost basis that I also think is covering up a lot of costs that are probably very, very excessive, which is why you could look at She-Hulk and say, how is that costing you $25 million when the CGI doesn't look good? Something just isn't feeling right about this. What this structure, and again, this structure, it's not inappropriate. It's not fraud. However, it's only not fraud if when you look at it as an executive, the CFO, the board of directors, the other executives at the company, if they look at it and they say, you know what, the shows we're making, they really are worth $25 million an episode. This is a reasonable thing that we're doing. It's not just some sort of, actually called a sham transaction. We're not overcharging too much. We're not overproducing too many shows. This is a reasonable thing we're doing, and there's reasonable success. That if we were selling these to Netflix, if we were selling and making these shows for a competitor, that would be reasonable that they would pay this kind of money. I don't think that's happening anymore. I don't think it's reasonable that She-Hulk got 9 episodes. And it's not just She-Hulk. It's Moon Knight, Ms. Marvel, all this other stuff. They're not getting enough views to justify these expenses. When that happens, they're supposed to make a financial adjustment and a write-off, it's called. So they're supposed to take one-time charges to kind of catch up on the expenses and say, we spent all this money, tried it didn't work out, we're going to correct it now, and going forward, they're going to do that. What's also coming is Bob Iger is getting rid of this Disney media and entertainment distribution thing that Bob Chapek utilized. The reason Iger is getting rid of it is he says he wants to give more control to the studio heads and the production heads so they can make more of the creative and distribution decisions. And that's fine, but what that's going to also do is they're going to get a financial impact where they're not allowed anymore to make these kinds of sales. They're not going to be a separate business selling to the streaming service. They're not going to be able to record the revenue the same way. So they're going to have to eat some additional losses on top of that. They're not going to have the same expansive built-in profits that they do when they're using this transfer price model. Transfer price thing is very profitable and it's potentially a great tool, but this is completely playing with fire. You have to have everybody's confidence when you're doing it. Everyone has to really believe in it because if something goes wrong and people start looking under the hood and they say, wait a minute, no, I don't agree with these assumptions that you've made, you're going to be in a very bad situation and people could accuse you of fraud. The thing that makes this possible are a few things, because Disney, they can play games with writing off like this expense over this amount of time. That's something that all businesses can do. But when they're their own best customer and when they have very like one-of-a-kind brands, like a Marvel is a one-of-a-kind brand, and they have a unique situation like the streaming service, which is a new thing that people are still trying to understand the accounting of. It's very much on the edge of what they're allowed to do. And I'm confident. I don't think that Bob Chapek was so much like cooking the books and changing financial numbers and things like that. But I think he wanted to continue to aggressively use this transfer price situation so that they could, look, they're reporting episode profits of $7.5 million an episode. They just are, when they make stuff from Disney Plus. So why make 18 episodes of Daredevil? Well, there's 18 times 7.5 million profit because they just delivered them to their own streaming service. So they were able to recognize revenue and recognize this 25 million right away while only having to expense like 2.5 million. So they have a positive benefit of $5 million a year in reported profit. It covers up a lot of other potential financial problems. This gets very complicated very quickly, but it's fascinating. You can look up more about transfer prices. You can look up more about when the IRS says you can write off expenses and how they do with film and TV. It gets very complicated, and I'm not a particular expert, but I do certainly understand the basic concept of transfer price and how it allows them to immediately make a profit that's really a fake profit. It's not a real profit when you're making your own content and selling it to yourself. In addition to this, and this is what the panic part is about, is their stock fell 44% in 2022. They had to force out Bob Chapek, at least the board felt they did, and replace him with Bob Iger. Bob Iger is not acting as a dynamic CEO. He used to be in front of things all the time. People would look at what Bob Iger was doing and they would get, inspired by him. He represented the brands well, people felt. He was a very pro-creative kind of guy. But they're not seeing that right now. I'm not seeing any of that. Disney has to make a lot of decisions about how they're going to change their accounting procedures. Watch for this when they announce that they're officially going to change this Disney Media and Entertainment Distribution division. This is when the transfer price thing really kind of has to take a major hit just because of accounting rules. They're not allowed to report the revenue the same way. There's going to be a lot of heavy-duty announcements for 2023. And I don't know how they're going to pull out of it. Avatar is very successful. That worked out for them. Hopefully they can have some more successes, but I'm very skeptical about what the future of Disney is going to be. Let me know if you like this discussion of transfer prices. I did the best I could to explain it in a simple way, but also in a way that would be meaningful. I know it's a little bit confusing, but let me know if you like the idea of me finally going over. It's the last day of the year. I wanted to make sure I did give you guys an explanation of why I'm so passionately talking about transfer prices and how I think it's a big part of how Disney has been sustaining itself and showing profits. And even though the losses in the streaming service are enormous, they're actually much higher because they take into account things like this amortization, where they're not really reporting the full expense of even all the content they're putting on there. And even the losses in the streaming service get made up by fake profits from their production side of selling episodes to the streaming service. And they're able to do that because of amortization, and they're able to do that because of the transfer prices. It's fascinating, but let me know what you think of it in the comments below. Please be sure you are subscribed to the channel. Click the bell for notifications, and I'll see you again soon with another video. And if I don't see you, I'll miss you. And have a great, great new year. Thank you so much for supporting the channel.